everyone, it's Zach, also known as Trading Aloha on Twitter. We finally wrapped up a dismal 2022 and we're ready to get started fresh in 2023. I hope everyone had a great New Year's and hopefully we can all continue to navigate this bear market together. It doesn't matter if this is your first cycle, your second cycle, or you've been through this a numerous amount of times. They never get easy and they're always hard to stomach. Just know that in bear markets, this is where the true development and innovation takes place. And as we continue to go through 2023, at least when it comes to GameFi and it redefines itself, I hope we can all work through this together and find some great gems to get into, both from an earnings standpoint and as an investor, but also see innovative ways for GameFi to come forward in 2023 to set the stage for the next bull run and games that are truly fun to play and that'll have longevity. It's really hard to capture the overall picture of GameFi in one or two different platforms, but if you haven't taken a look at Footprint Analytics, they do a great job of pulling in data from multi-chains, and you can sort and filter it in pretty much any way that you want. So I think kind of as we walk through, the current state of GameFi from 2022 into 2023, I just wanted to show some of the capabilities that Footprint Analytics can do, just to show you like the GameFi trends on a macro scale across all chains, not just focus on Avalanche. Because as GameFi kind of moves forward into 2023 and 2024, if one chain is successful, generally most chains and games will become successful as well. So overall, if we see the trend kind of increasing across the board, then we should also see the trend on Avalanche start to increase as well. The one thing about Footprint Analytics that's hard for it to decipher, especially when it comes to Avalanche, is the subnets. While they have kind of ingested some of that data, most recently starting in like October, November, they made a major upgrade to help kind of bring that data in. A lot of it is not captured here, so I don't like to go into micro detail with Footprint Analytics. I usually have to go onto Snowtrace and kind of break it down from there. But this will give us a good idea on the macro scale, exactly what's going on and what happened over 2022 with GameFi specifically. So, what we've seen across, numerous industries and analysts and market research kind of articles that have come out, GameFi is projected to reach about 2.8 billion in valuation over the next 6 years, which is in part when we saw such a huge influx of PDE crypto games in 2022 and late 2021. They're also suggesting that the industry itself has about 20% compounded annual growth rate in that same 6-year period. So as we see, innovative games figure out a way to become fun and sustainable, once that model is proven and we get, kind of some institutional buy-in, as we've kind of seen at least some on the Avalanche side with, GameStar Plus coming on the line and Wildlife Studios as well. As more of these kind of Web 2 or businesses kind of come into the Web 3 space, as regulation is kind of put together and there's not as much ambiguity when it comes to taxes and risk, I think we'll see, that valuation actually reached within the next 6 years, as well as that growth rate around 20%. I think that's on the low end once things start to pick up steam. So we'll see what happens. So let's take a look at kind of what happened over 2022 real quick, and then we'll talk about what I think is on the horizon for 2023 and some things to look out for. So when we look at the Footprint Analytics GameFi page, which is updated every day about 8 hours after UTC time, as you can see, you can watch the volume, which can ebb and flow based on the days. You can see this 38% drop in daily volume from yesterday, which is kind of expected. It's a holiday, people are recovering from New Year's, so I don't put a whole lot of weight on that number, especially when we're talking about a macro scale. I like to just focus on all the charts below these numbers, but if you were watching it day to day or, week to week, even, you could kind of just check in and see exactly what's been going on day to day with the amount of transactions and the number of daily gamers that play. But for the purpose of the video, for, over 2022, you can see exactly kind of what we saw in the market with, the overall volume across all chains on GameFi dropping drastically from the beginning of January. I would say, really the second week of 2022 is when it peaked. It had some spikes here and there as events took place. And then we kind of settled into a kind of a range here in August and September, and then kind of spiked in October briefly. And then we were kind of down here by the lows of the year last week with, the lowest volume we've seen. So, I mean, that's the volume in itself. But if you look on the transaction side of the house, they stayed pretty consistent. I mean, overall, it's about average. I would say 145 is probably the average here, and we saw that pretty much stay the same with some highs and some lows all the way through. So transaction wise, we're seeing the same amount as far as what's going on within GameFi. So the transactions are still being made, just the overall volumes being lower. And I think that's a lot to do with some of those Ponzi type games drying up, some of the games not taking off. So there's not as much secondhand volume on marketplaces that are being taken place, and there's just not a lot of volume overall with the prices being as low as they are. So if you looked at active projects by chain, as you can kind of expect there's with a decrease in the market and the overall bear sentiment across the entire crypto space, as you'd expect, kind of the projects kind of dropped down as projects dried up, went away, and not as many were launched as were anticipated throughout 2022. But I would still say, it's a solid amount of active projects on chain. And then you've got the weekly number of games here on the right, which surprisingly, they are still on the rise across all chains. I mean, you see Polygon trending up into about the 300 games active weekly. You've got, if you kind of circle on Avalanche there, you can see that it's steadily moving up slowly, but it's there. It's still kind of increasing as games that were developing in 2021 to 2022 are launching their projects, and games are becoming more active. They are increasing in numbers. And then when you look at the market share of gamers, daily volume by chaining game, and users by chain, this is where I kind of have to take this with a grain of salt, mainly because if we're looking at Avalanche specifically, some of that subnet data isn't captured correctly quite yet, as from what I've seen, kind of diving behind the numbers a little bit. So I take this with a grain of salt, but it is interesting to see, that the BNB has got the majority of the daily volume, as well as Axie Infinity with the Ronin chain, and then Polygon, which has been up and coming all throughout 2022 as a GameFi chain of choice, increasing throughout the year. And then you can kind of see exactly which games have the biggest market share. And obviously the Sandbox and Axie Infinity are the two top ones. And then you've got Nine Chronicles, Metaverse Miner, Alien Worlds, which is a big one on Ethereum, DeFi Kingdoms, and you can keep seeing how it kind of shrinks down there into some. Users by chain, this is one I don't really put a whole lot of weight into, just because of the subnet issue. You see about 58,000 gamers on Avalanche. I think that number is probably higher when you take into account all the different subnets. It is interesting to see that there is kind of that increase in new users, number of active users, and kind of the 1 day change and the daily active user ratio. You can use that to kind of take a look at exactly what's going on each chain. I do like to use this on Polygon, Solana, BNB, and Ethereum, just because the numbers seem to be a little bit more accurate depending on the game and what you're trying to look for. So overall, kind of to wrap that up, I mean, what you kind of expect in a bear market, the volume decreases as the projects kind of dry up, the prices drop, people become less interested, and kind of take their money elsewhere, move into cash until they can determine exactly when the bear market's going to end. And then, you start looking for when that investor money is going to come back into the space and new games are going to launch. And when the general sentiment kind of changes direction, you should see those weekly large spikes in volume. And then that are kind of put another a floor is put in as they slowly start making higher highs and lower lows. So I don't think we're going to see that probably until, mid to late 2023. But you never know what's going to happen with all the volatility that's going on with, FTX and, how many more like black swan events do we have in crypto that could kind of tank us another, 15, 20%, or does it go the other way and we see some innovative game release that, kind of sets it apart from the crypto macro world, and we start seeing like large moves upward as we see investments made into GameFi. I don't know. I have my theories, which I'll kind of talk about towards the end of this video, but that's some things to look out for as we move into 2023. And then one of the other dashboards I'd like to keep a look on is, I've made a couple duplicate copies and kind of picked pieces of a bunch of different dashboards within Footprint Analytics that I kind of like to monitor over time, and I've thrown them on to my own dashboard that you're free to take a look at, duplicate, or make a copy of at any time. You can just jump over to my Footprint Analytics page, which is also at Trading Aloha, and then you can kind of take what you like from what I've put together and make it your own in your own way. But I like to keep an eye on the funding as far as, what major companies or brands have put money into games over the last year or so. And there's a couple different data streams that pull from that. and it provides some good data. So you see there's about 319 different funding rounds that were put into GameFi this year, and exactly the amounts that were done in 2021 and 2022. And you can see there's been even though there was, such a downturn and you saw kind of the investments start to dry up and different things kind of given up on, there still was about an 83% growth rate from 2021 to 2022. Granted, a lot of those investments were made, prior to the sharp decline, and how much of those investments are tied into the FTX meltdown, we don't know yet. So that number could drop significantly, after some of those fictitious funds are found to be useless and not really committed to any of those games. So we'll have to see how that shakes out. But overall, seeing an 83% growth in throughout 2022, I think is a great sign that there's still the interest there. And when you look at the right, who is running these financings through 2022, and when you have Epic Games up at the top, which putting $2 billion into the ecosystem, with Anna Monica Brands doing some acquisitions as well, Immutable, you got Limit Break, Sky Mavis, a bunch of different well-known studios putting money into the ecosystem through a bear market. I think that's a great sign that there's still that idea that this is a successful venture and that there's going to be things that come out of this, whether it be a full Web3 crypto game, or does it mold Web2 and Web3 together when we start seeing some sort of upturn into a bull run in 2024, 2025 ish. I think that's great news. So I'm looking forward to kind of seeing how the financing runs into 2023 and exactly where all that money is going to come from. So you can kind of see exactly when all this happened. In April of 2022 is the biggest one, which was in part by the Epic Games investment. And then it kind of bounced back down to about, 400 million or so in May, and dropped down to like 185 in June, come back up. So, if it was going to be dried up and dead, I don't think we'd see these, return to about 400 million or so, or 400 billion at any point during the year. So, sure, we've seen a drop off in the last quarter of the year, but I think we'll start seeing this number go up as we start seeing regulation put into place, and more Web2 businesses kind of taking that leap into the Web3 world, and putting their money into different projects that they think are going to be successful. So that kind of brings us back to where we are now at the end of 2022 and into a fresh start of 2023, and then pushing into 2024. So how does GameFi go from the Ponzi scheme that everyone thought some of the games were in the late 2021 to the innovative games that have gone away from how to make as much money as possible in a short amount of time in early 2022 to what we've seen most of 2022 was development and building to release fun-to-play games that are sustainable, that have a sustainable tokenomics system, that we're still kind of seeing those games start to slowly launch. So we'll have to judge those into 2023 to see if those are successful or not. But ultimately what we're looking for is games that are fun to play, that potentially have the ability to earn additional income on the side. Now, this income's probably not going to be life-changing, because if it was, then we would see an influx of people that are just in it to make the money, and the game probably wouldn't be sustainable or be such a high price of entry that would deter a lot of the casual players that would keep the game going long term from entering. So what we're probably going to see is games that are fun to play, that have a sustainable ecosystem, and how do they come up with innovative ways to make that happen? So there's a couple of different ways we've seen teams on Avalanche do that. We've seen the Battle for Giostone team introducing the esports model, which I think is going to be hugely successful once we start to see them launch. They've already run a couple of pre-alpha tournaments. I think we'll see that continue to build into 2023. And I'm excited to see kind of where the esports angle plays into GameFi, especially in the Web3 system, because I think that's just a huge unexplored area. And I think we'll start to see other chains and teams do the same thing if they have other, like MOBAs that are out there, or even, FPS games like Shrapnel. I think we could see turned into like a really huge esports following, as an alternative to like the Web2 Call of Duty type things. The gaming industry as a whole last year is estimated that it pulled in over $20 billion in revenue. That number is bigger than music and film combined. So when you look at that $20 billion number, almost 30% of those fees go to the platforms on which those games are held. Usually, the App Store by Apple or Google or even Steam. So that's over about $100 billion of value that's extracted from the gaming industry and sent to Apple, Google, Steam, whatever platform they're on. So, how much of that $100 billion is actually going back to the players? And it's very, very small. So Web3 opens up the opportunity to get most of that money to funnel back to the players as developers of skins, land, quests, lore, you name it. You've seen different angles come apart on how developers can allow the players and the community to help build out the game to receive some of those fees on the side as opposed to going to the platforms. That being said, it's going to be hard to pull some of those Web 2 institutions away from those microtransactions that make up a huge part of their bottom line. So we're going to have to try to find a balance there as Web 2 institutions continue to pour money into Web 3. How much are they going to allow themselves to lose as far as their revenue to give that back to creators on the Web 3 side? So I don't know, but I think that number needs to be cut in half at the very least. I'm hoping that we could see only 15% go to the platform. Some of that goes to the actual studio owners, whether it be Epic Games or anybody else, and then the remainder of that gets transferred back to those individuals that are developing the skins, developing the weapons, developing the land, or even just players, and having that money pumped back into either the treasury, the rewards pool, the liquidity pool, or some way that's put back into the ecosystem to make it sustainable. And I think you can see that. I think I was going through a bunch of different reports and overviews of Metaverse and GameFi and investment strategies, and I ran across J.P. Morgan's 2022 opportunities in the Metaverse report, and they stated there was roughly $54 billion that's spent annually on virtual goods, skins, and everything else that goes into that. And if we put some of the blockchain technology to use, and you open that up to the Web3 side, that money can eat like a big chunk of that money should be those things that are tradable on secondary marketplaces, and that would not only get money to the studio, but also give those opportunities for the players to get some of that money back in their pockets and help make the game a better place. And I think that's a huge part of what we're going to see in 2023, and probably really not come to fruition until 2024 as some of these larger studios push out some of these games. But I think $54 billion spent annually, and if you kind of slice some of that away from the Web 2 studios, I think that's a lot of money that can go back into making GameFi sustainable, as well as having a fun game to play. And I think it's worth reading the entire thing if you're interested. We'll link the J.P. Morgan's 2022 report below. But they did have one slide that I think it's worth kind of highlighting here, and it's how does the gaming ecosystem survive going forward? And they focused on three things, and it's three things we kind of talked about all through 2022, and in the wrap up of last year. Exactly what we thought going forward. The first one being industrializing the game platform with digital access. The second one is enabling gaming content creators to be more easily commercialized with their creations, which is exactly what we've been talking about with skins and being able to reduce the fees that the platforms get, reduce the fees that the studios get, and putting that money back to those people who are actually putting the time in to help develop the game. And then the third one being scaling the metaverse industry worldwide across multiple currencies, payment methods. And I think a lot of this is going to have to do with finding that one-stop solution for virtual wallets that offer the ability to pay in USDC or BNB or AVAX or Ethereum, and having that being processed efficiently and as cheap as possible. But that's going to tie into how is that taxed, how is that regulated? Because at the end of the day, you're not going to see a lot of studios step in and try to do something innovative that might come back and bite them with a big tax bill in the end, or they get sued or are in violation of some regulation they weren't aware of. They want to see exactly what the taxes are, what the regulations are, and what the rules are before they start putting more money into an unproven system. So I think, as much as we all hate to see regulation, I think in some aspects there needs to be some sort of framework put in place just enable so them to understand what their left and right limits are as far as what they can and can't do, so that they're willing to take that risk and help kind of develop some of these things out. On the third party side, we see plenty of teams that are willing to step in that are not affiliated with larger Web 2 studios, but they've got to bootstrap it or do it through an NFT sale or token sale. And that's great if they come up with innovative ways to make those games fun and the ecosystem sustainable, like a lot of the games on Avalanche are trying to do. I think that those first movers in the space that kind of catch on are going to be the ones that everyone flocks to initially. So the games I'm keeping an eye on, like Shrapnel, Battle for Geostone, Imperium Empires, all those games that are still kind of churning through exactly what they want their final products to look like and how their ecosystem is going to be sustainable. And the alphas that I've played of those being actually fun, or the trailers looking really good. I'm excited about them, so I'm going to keep my eyes on them going into 2023. And I think they can, accomplish these three verticals they're talking about here in the JP Morgan report. And I look forward to seeing, how that, ends up at the end of 2023. So that really wraps up, my overall thoughts on, 2022 and what we're going to see into 2023. And kind of, as we've seen, most of the successful games that had any sort of success that debuted in 2022 strayed away from that Ponzonomics model that was just kind of a death spiral to zero. And they introduced a more hybrid model. It was a combination of both pay to play and free to play models, in which new players easily enjoy the game for free, but they don't need resources in order to progress or win the game. In this case, in-game assets, such as the ones presented by Castle Crush, which you can play and be competitive without having to purchase the NFTs. Having played that, I played it for a couple of months now without having any of the NFTs, and was able to progress far into the game, help guilds become better, and didn't have to buy any of the NFTs. I then did switch over and bought 2 NFTs just to see what it was all about and if it made it that much more different. Sure, it does take some of the grind time off of having to get those levels up, but it didn't really alter anything. It was easily defeatable by different strategies, not using NFTs. So you have those options to buy those NFTs in AVAX or using ACS, which you can earn through playing the game as well. So those type of models are the ones that were successful in 2022, and I do enjoy the fact that it was easy to play. It was easy to kind of track, and the team's done a great job of kind of keeping that updated, and we'll see where they take it in 2023. But just knowing that model's out there, where I'm getting paid in ACS daily for playing a game on my iPhone, which is just through an app and has no interaction with the blockchain needed on a day-to-day basis. It's just I linked my wallet to my account, and then the ACS is just sent pretty much every day as I play. And I think that kind of ease of access is what's going to be successful in Web3 gaming. So, as further away we can get away from the negative sentiment that stemmed from the play to earn or pay to win models that, only derive their, earnings from new players entering the ecosystem, which is ultimately just a large Ponzi scheme. The more we can get away from that and more into games that people enjoy to play and are not relying on new players to keep their ecosystem alive, the better off Web3 is going to be in the long run. So do we need this gap year that we saw in 2022 and maybe even 2023 to get as far away from the 2021 era as possible to kind of shake off the negative sentiment that GameFi had in 2021 and really early to mid 2022? I think it's probably a good thing. I think there needed to be a longer lull to force the innovation and investments from outside Web 2 industries and innovative thinkers within Web 3 to create new sustainable models and focus on being fun and have a low cost of entry, but also continuing on the decentralization push and getting some of that money back into the hands of creators. So hopefully this helped at least get my thoughts on exactly what I saw through 2022 and what we're looking at into 2023, at least from my perspective. You can take a look at any of my footprint analytics dashboards. If you want to follow the link below, we'll drop it down there. We'll also drop the JP Morgan overview report in there if you want to take a read. It's got a lot of great information on kind of just an overview of Web3 in general. It doesn't just focus on GameFi or the Metaverse, but it covers all aspects. And I found it really interesting to see, from an institutional standpoint, kind of what they're looking at, because they're not always right, and generally they've been wrong a lot of times when it comes to crypto. So just being able to bounce my thoughts off of what they're thinking to see, if mine are in line with them or if there's areas where we differ. And I think there are, but in general, I think the things that need to happen for there to be a successful transition for gaming and GameFi and to kind of be successful in Web3, I think their major points are probably pretty solid, and we do need to accomplish that if we want GameFi to succeed going into the future. As always, you can drop me a line on Twitter at Trading Aloha anytime. I'd love it if you'd give this video a like and subscribe to help the channel, as well as help me continue to produce content for the channel. And if you have any questions, please feel free to reach out on pretty much any medium. I'm happy to chat about GameFi or just talk crypto in general. So I hope you had a great New Year's holiday, and I look forward to 2023 with you all. Thanks.